Why landmark cars is disappointing investors? With the narrative around premium consumption taking off in the aftermath of COVID, landmark cars with its association with Mercedes-Benz became one of the sought after stocks in this space. But that trade doesn't seem to have worked in favor of investors at this point of time, with the stock recently falling closer to its IPO price. So what is the reason for disappointment? The number one reason is that the revenue growth from vehicle sales business has plateaued out in the last 3 years due to some of its brands not doing well, especially Jeep and Honda. So with BS6 emission norms, Honda and Jeep had to phase out few models, leading to poor volume growth from these brands. So despite Mercedes-Benz doing well over the last 2 years, the poor volume growth from these two brands like Jeep and Honda hurt revenue growth as well as profitability due to low operating leverage of showroom and workshop assets. So Landmark Cars has identified and acknowledged this issue, and it has recently decided to extend its brand association to M&M and Kia, which are leaders in the premium segment, especially the SUV segment. So it is also scaling up its brand partnership with BYD and MG Motors, which are emerging players in the EV space as well. So, but with these new brand associations, Landmark Cars again has to incur a lot of upfront cost, especially for showrooms and workshop and even manpower. So a combination of low operating leverage from some of its existing brands and the upfront costs associated with some of its new brands is actually hurting the profitability. So that is the core problem now, leading to earnings disappointment. Meanwhile, the services business still continues to be a lucrative business for Landmark Cars, with it is growing and it is also having very high EBITDA margins, high teens EBITDA margins, as well as high ROCE. What's ahead for Landmark Cars from now? There are 5 things to look out for. Number one, its new brand associations with M&M and Kia will actually give it volumes, or it will help to recover volumes. Even though there will be upfront costs that will hurt its profitability. Meanwhile, it is also looking for cost saving measures that may help to recover some part in the bottom line. Number two, it is also scaling up its partnerships with BYD and MG Motors, which are also going to be some of the key players in the EV space as well, and these are potential brands to give volumes as well. And the good thing to note is that the problem with MG Motors is also being resolved now, with JSW Group coming as a strategic partner. Number 3, the A-lim brands such as Honda and BYD are also charting out revival plans for India. Mind you, Honda has a very good, very strong brand recall in India after being here for several decades, and Jeep also has very strong loyalty towards the brand in the premium SUV segment actually. So these two brands are here to stay, and they are charting out revival plans. For Honda, the issue has been that it had to phase out a few models, while it actually did not think of launching a hybrid model for its SUV recently. But it is trying to address all these issues at this point of time. Number 4 is the Mercedes part itself. Like Landmark Cars has 15% share of volume sales of Mercedes in India at this point of time, and it is also trying to see whether it can increase it further through consolidation or other inorganic opportunities in future. Number 5, Landmark Cars has also recently ventured into pre-owned cars, especially with the brands it is currently associated with. So it is starting with a GMV of almost 100 crore for this pre-owned cars, and this will also help Landmark Cars to efficiently utilize its showroom and workshop infrastructure. So looking at all these things, Landmark Cars still remain a niche opportunity to play the premium and luxury consumption growth in passenger cars at this point of time, which is still severely depressed due to higher import duties and taxes. But the good thing is these tax structures are ripe for a change at this point of time, which can significantly increase affordability as well as volumes in the premium and luxury segment. So to put in perspective, Mercedes-Benz actually sold 8,000 cars more than in India in a much smaller economy like Turkey. India's annual luxury car sales volumes is only 45,000 units for an economy of this size, and this is primarily due to high duties and taxes. And as a first step, government has just started with import duty cuts in EVs, where they have recently cut it from 100% to 15%. And even companies like Toyota and Maruti has gone to government to cut taxes on hybrids. So this tax structure may be ripe for a change at this point of time, and that is the most important thing to look forward to. For investors to make money from the stock, what should happen is exactly the opposite of what is happening now. That is, the volumes should increase and the operating leverage should kick in, which will in turn improve the profitability and ROC of both its service and sales business to much higher levels from where it is now. Meanwhile, this car dealership is a very tough business to be in, and here is a promoter who is trying to who is eyeing leadership and consolidation in this space. So the first call for an investor is to whether to get into this business itself, and the choice of the company is actually the second call. So if you are still interested in this space, then this is the company to look for with patience, because there are three important levers that have to play out for the company to come out successfully in this space. Number one, its ailing brand should come up with strategies to revive volumes, which is very important. That is Jeep and Honda, and to some extent Volkswagen as well. Number two, its new brand association like M&M, Kia, BYD and MG, that should also give it volumes, and it should be able to successfully scale up these two as well, which may also take some time. And number three is the inevitable cut in import duties and taxes, because otherwise the luxury car sales volume cannot grow. So repeat, and one need really lot of patience and allow these things to play out to reap any investment benefit from this stock. That's it. Thanks for watching. As a disclosure, Landmark Cars is actually part of Prime Trends Consumption Small Case, and I also have personal investment interest in this stock.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.